Why 2023 banking graveyard is about to scream a severe Giga financial crisis and crash the stock market at the same time. Elon Musk warned. Uber has no car. Airbnb has no real estate. Regional banks have no money. This is the new economy. Breaking news, bloodbath in regional banks. PacWest Bancorp crashed 39.3%. Western Alliance meltdown 22%. Regional bank ETF down 6.5%. Every single name in the regional bank ETF is red. How to guarantee a failure. First Republic Bank gave Mark Zuckerberg a 1% mortgage rate in 2012. When the average 30-year rate was 3.5%. Why TLT is bouncing right back on Tuesday. Jerome Powell urged to halt interest rate hikes by Warren Sanders. The bond market is screaming a warning of a massive crash. Wall Street is already laying off themselves. Over 70 major companies has filed for bankruptcies. Those that act fast enough will be the only ones who will survive. Why 2023 banking graveyard is about to scream a severe Giga financial crisis. I will explain it all right after this.
How you like that? How you like that? Nah. Look at you, now look at me. Look at you.
Welcome back everyone to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my new website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to be my client, don't you? As Wall Street slumps in IPOs and mergers deepens this year, top Wall Street firms, including Morgan Stanley and Bank of America, plus Citigroup, has turned to job cuts this recent weeks. Morgan Stanley plans to eliminate 3,000 positions by the end of June. That equates to 5% of the New York-based bank's workforce. The layoffs are expected to affect banking and trading staff the most. Last month, analysts criticized Morgan Stanley for posting higher costs, while revenue declined. Expenses in the firm's investment bank and wealth management division hurt profit margins in particular. The bank's moves aren't isolated. The industry's job cuts began in September when Goldman Sachs started firing all the low performers. Nearly all of the major Wall Street firms followed, and Goldman had to resort to another, deeper round of layoffs in January. Elon Musk says the pile of dead banks proves more rate hikes will cause a severe recession. I may have more real-time economic data in my head than anyone ever. The graveyard of dead banks proves that more Fed interest rate hikes will spark a severe downturn, Elon Musk said, claiming that data from his companies meant he had more real-time insight in the economy than anyone ever. The tech billionaire responded to an economic outlook from former U.S. Treasury Secretary Larry Summers, who predicted that the U.S. had a 70% chance of tipping into a recession next year. Mild recession is already here, Musk replied. Further rate hikes will trigger severe recession. Mark my words. In particular, Musk pointed to turmoil rocking the banking sector, with the most recent failure being First Republic Bank. That marks the latest bank to go under since March's Silicon Valley Bank collapse, which suffered a bank run after high interest rates hit the bank's bond portfolio. It's not just like the canary in the coal mine. Silicon Valley Bank died. One of the strongest miners, Credit Suisse, died too. The cemetery is filling up fast. Musk said, making the case that banking failures are signaling major stress on the economy stemming from Fed rate hikes. Just from Silicon Valley Bank's failure, it has slowed down the growth of lots of high-growth tech firms in the valley. Even cloud computing, SaaS businesses with enterprise phasing model are having trouble closing potential sales with other corporations. Musk, for his part, has slammed the Fed's interest rate hikes 20 times in the last 7 months. That's because inflation is lower than what it shows in the Fed's data. He said, claiming his policy moves over the past year were foolish and responsible for Tesla's $600 billion market drop in 2022. Musk's array of company also gives him more insight into the state of the U.S. economy, he argued. Between Tesla, Starlink, and Twitter, I may have more real-time economic global data in one head than anyone ever. Musk's 20 criticisms of the Fed during the past 7 months. Number 1, from September. A major Fed rate hike risks deflation. Number 2, from October. The Fed is raising interest rates more than it should. But I think they'll eventually realize that and they'll bring it back down again. The Fed is not listening because they are looking at the rearview mirror instead of looking at the front windshield. Number 3, from November. The Fed needs to cut interest rates immediately. They are massively amplifying the probability of a severe recession. Number 4, from December. If the Fed raises interest rates next week, a recession will be greatly amplified. Number 5, from December. Tesla is executing better than ever. We don't control the Federal Reserve. That is the real problem here. Number 6, from December. I keep saying the Fed rate is insane because data I'm seeing says we're already in deflation. Number 7, from December. Risk of stating the obvious. Beware of depth in turbulent. Macroeconomic conditions, especially when the Fed keeps on raising interest rates. Number 8, from December. At the risk of being repetitive. These Fed interest rate increases might go down in history as most damaging ever. Number 9, from December. It's blowing my mind how much the Fed has raised interest rates so high. The economy right now is like a car driving around near a cliffside, and the Fed is driving it looking at a video of the rearview mirror taken 3 months ago. That is not a good way to drive a car on a windy cliff road. I think we're in for a hard landing. Number 9, from January. I wonder what would have happened in 2009 if the Fed kept raising the interest rates instead of lowering them. Number 11, from January. The higher the rates, the harder the fall. Number 12, from January. Fed rate increases make cars more expensive for consumers, increasing the difficulty level for automotive companies. Number 13, from January. Every time the Fed raises interest rates, they're increasing monthly payments for anything bought with debt. Number 14, from February. Maximum skill with monetary policy is extremely important in this role. A bad Fed decision affects the lives of everyone. Number 15, from March. The Fed is operating with too much latency in their data. Number 16, from March. Once again, we are confidently wrong. The Fed. Number 17, from March. The Fed needs to drop the interest rate by 50 basis points on Wednesday. Number 18 from March, a major driver of depositor money is people moving money from low-interest savings accounts to high-interest money market treasury bill accounts. This foolish rate hike will worsen depositor flight. Number 19 from April, you're welcome. Now if only you were the actual head of the Fed. Number 20 from April, every time the Fed raises interest rates, that's equivalent to increasing the price of a car. For most people, their ability to buy a car is a function of if they can make the monthly payment or not. If interest rates are really high, like they are right now, in some cases, people cannot get a loan at all. Yet the Fed will hike a 1/4 percentage point on May 3rd, then go into a holding pattern until rate cuts start in November. Can you believe it? There are 70 major bankruptcies in just 4 months this year. For 2009, there were 118 bankruptcies through April. In lockdown impacted 2020, there were 71 bankruptcies. In 2023, there have been 70 bankruptcies already. Liquidation sales are on, including Bed Bath & Beyond, David's Bridal, Serta Simmons Bedding, and Party City. There will be more. Here is my client Ted Eazzy's book, Wicked Pussy Perfume. It is a femdom novel and it's about money, stockings, and the stock market. Such an amazing book with such an amazing author. Order your copy today. You are such a good boy for watching my video right till the end. Bye.